Hey everybody, welcome back to another video. In this video, we're gonna go over how you can use your retirement account to invest in real estate, not just stocks and mutual funds like everybody tells you. And today I'm gonna show you exactly how to do it step by step. By the end of this video, my promise to you is that you're gonna know exactly how to move money from your IRA or 401k into real estate deals, even large apartment buildings like the one we buy at Red Brick Equity. This is educational, not tax or legal advice. Please talk to your CPA or attorney before acting. And if you want to invest with me, alongside me, take your 401k IRA funds and actually invest it in multifamily properties, and you're an accredited investor, which means you make over $200,000 a year, $300,000 jointly, or $1 million in net worth, click the link down below, top of the description. In this video, we're going to talk about why traditional retirement account falls short, the self-directed IRA or solo 401k, rules, custodians, step-by-step, a simple illustration, common mistakes to avoid, an action plan, and how we work with retirement investors. So with that being said, let's get into the video. So first I want to go over why traditional retirement accounts fall short. When you park your money in a workplace 401k or a standard retail IRA, the custodian usually limits what they can sell you: stocks, bonds, and target date funds. So most of the time when you move your money to some workplace IRA, they can only have you buy stocks and bonds, and typically they make their own funds for you to go out there and purchase and buy. So it's kind of like a great way for them to sell you nothing else besides what the hell they have to sell you. So you're tied to Wall Street's volatility, and you miss diversification into hard assets that can produce income that you actually control. And that's why typical retirement accounts fall short, and why you need to move those to a self-directed IRA or a solo 401k. So let's get into it. A self-directed IRA or solo 401k is the same IRS-approved wrapper, just with a custodian that allows alternative investments like real estate, private funds, notes. They even have crypto now that you can actually invest in from your self-directed IRAs. So these companies, they still charge the same amount of fees, they still charge fees and all that kind of stuff to move your money over here, except they're not tied, not so much like you need to invest in this and you have to buy this stock. Instead, now they're like, you can do whatever the hell you want, let us approve it, let us help you out through the entire process. You have way more flexibility on what you can go out there and purchase, and it is your money. You have to invest it correctly for the next 10, 20, 30, 40, 50 years. And so you might as well invest what you want to invest in, okay? So how does it work in plain English? First, you're gonna open a self-directed IRA or solo 401k with a custodian that permits alternatives. If you want help and want connection to one, click the link top of the description. It'll have you book a call with us. Once you book a call with us, we can share that if that's the right path that we should go down, okay? Transfer or roll over funds from an old IRA or 401k to this trustee to trustee transfer, so there's no taxes or penalties. So you're going to move the funds from your current account to this new one. Then the account invests directly into a property or a fund. Distributions and profits flow back into the retirement account, compounding tax deferred in a traditional or tax-free Roth. So what this means is that the money, for example, when people invest in their 401ks, IRAs into our real estate fund at Red Brick Equity, the money comes from their accounts to our account. We put it into our real estate funds account. We buy the real estate. That real estate money goes back to the 401k and IRA with cash flow. And you have to keep the money in that 401k and IRA till you're 65 anyways. So they're long-term investments. That's why we do long-term investments at Red Brick Equity, because you're gonna have to keep them long-term anyway. So our projects are typically 3 to 5 years. And so by doing this, it's perfect. All right, now let's go over some rules that you must know. So disqualified persons include you, your spouse, lineal relatives, and entities they control. So you literally, with the 401k and IRA, cannot invest in anything that you, your spouse, your relatives, or entities control. You literally have to invest your 401k and Roth and IRA self-directed into other people's stuff. That's why it makes it literally the perfect one. If I had a Roth IRA and you did, and we both had Red Brick Equity or real estate funds, it literally, the only thing that we can do is pass off the funds to each other. We can't even invest it in our own shit. So that's why I'm saying it's probably like the easiest way for you to get involved and get investing is by doing this. No self-dealing or personal benefit. Your retirement account can't buy your family cabin, you can't vacation in an IRA-owned property, and you can't swing and hammer for sweat equity. Expenses of the asset are paid by the account. Income returns to the account. Don't commingle personal funds. That's a big one. Traditional accounts have required minimum distributions. Roth IRAs don't have lifetime RMDs. If an IRA invests in debt finance real estate, the leverage portion can trigger UBIT and form blah, blah, blah. 401ks are generally exempt from this. So I've never heard of anything any of this kind of stuff. This was just something that I found online, but we haven't really had that issue because typically you're going to be investing into a fund. And when you invest into a fund, then all of that kind of stuff gets erased. You're kind of like investing into private equity. It's not really considered like real estate per se, because you're owning like a piece of a business that owns the real estate, if that makes sense. So if it smells like personal use or workaround, don't do it. Now, picking a custodian. I have a couple good recommendations for custodians. Again, click the link top of the description, book a call with me, my team. It will help you like choose a custodian that we already have on file. But you want to find one that supports the assets you want, is transparent, turns wires quickly, and can work with checkbook LLCs if needed. Slow custodians definitely kill deals. They've killed a lot of deals for us in the past. And I want you to ask their average turnaround time for reviewing subscription packages and sending funds. Step by step, to move your funds over to one of these to invest into a syndication or any kind of real estate, you're going to open the new account, request a rollover, diligence the deal and operator. So you want to do diligence on who you're going to be investing in. Then you complete a subscription documents with the retirement account as the investor. So you're actually going to sign up to invest in the real estate fund with like a name like this. So instead of Antoine Martel, it's going to be Custodian FBO Antoine Martel IRA. So Custodian Equity Trust Antoine Martel IRA, something like that is kind of how it's going to be. That's how you're going to sign up for the real estate fund, the real estate investment. Then you're going to submit a direction of investment form. The custodian reviews the PPM operating agreement and wires funds. Distributions hit the retirement account at refinance or sale. Principal and profits return to the account. Expect the K1 and blah, 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 blah. We always give a K1. Distributions will go to that retirement account. And then when you sell or refinance, the principal and profits will return to that account. So yeah, and then if the offering is a 506C, which we have at Red Brick Equity, you'll also need accredited investor verifications, which we will help you with as well. So a simple illustration. Imagine an old workplace 401k with six-figure balance rolling into a self-directed. That IRA invests into a conservative value-add multifamily deal with 8% preferred return paid quarterly in a target equity multiple around 2 times over 5 years, pretty much what we have. Cash flow stays in the account, and at the capital event, the proceeds land back in the IRA or Roth, where you can redeploy into the next building. It's not a promise. Returns depend on the deal and operator, but that's how the machine compounds, okay? Some common mistakes to avoid. Don't mix your personal money with this. Don't let a disqualified person work on or rent from the asset. I would really just forget about the U bit. You can talk to your custodian about that. Choose a custodian so slow you miss the allocation window. Definitely take my recommendations, book a call, top link the description. Don't fund a deal before you understand how everything works in the deal and you trust the operator, obviously. And then action plan, decide whether self-directed IRA or solo 401k fits your situation. Open the account, interview operators. If the deal is a 506C, get accredited and verification ready. I can help you out with this completely free. Click the link top of the description. And then fund through the custodian and keep every document organized for easy annual reporting. So at Red Brick, as I've said multiple times, we share a large share of the limited partners a large share of the people that invest with us invest through their self-directed IRAs or 401ks. We'll coordinate with your custodian, keep subscription reporting clean, design projects. So we will help you through that entire process. I would highly recommend moving your funds over to something like this instead of investing it into the stock market. It's a long-term investment. The deals that we do are long-term anyway, so you might as well invest it into something that is actually gonna, make you more of a return and make you more money in the long run. Because if you think about it, the returns that you're gonna get on the stock market, right? They're gonna be like 8 to 10%, right? But with real estate, you can get the 15 to 20% IRR. And this is like long-term, and this is kind of like short-term and liquid, and then you can buy like bonds as well, which are like, let's go like this, 3 to 5% bonds. You see what I mean? Like it just kind of makes sense to do something the real estate's going to be long-term anyway. So you might as well invest something long-term with a long-term kind of plan, which is your 401k and Roth IRA. You might as well do it. So my best recommendation is move your funds over in a 401k Roth IRA. I have tons of people that I talk to every single week that say they have their money in these accounts and they don't really give a shit about them. It's like, perfect. You need to put it into something that makes you like a ton of money then. So that's my recommendation. That's my 2 cents. That's what I think that you should do. Move your money to a self-directed IRA and you can invest it in real estate. There's a lot of other ways to invest to invest these funds into other things. My number one recommendation for a lot of you listening that make a lot of money, high net worth, don't have a lot of time, move it over if you have it from one of your past jobs to self-directed, invest it in other people's shit. And if you just so happen to invest it with me, amazing. Click the link top of the description. We'd love to help you out through the entire process. Doesn't cost you anything. So thanks for staying till the end of the video. Please make sure to like and subscribe for more videos like this. See you on the next one.